11.11 Demand of money, liquidity preference theory, British economist John Maynard Keynes' book, The General Theory of Employment, Interest and Money, 1936, noted people prefer to keep a part of assets in liquid form cash money with three motives. 1. Transaction motive, for using money as a medium of exchange, e.g., for buying daily milk, vegetables and fruits. 2. Precautionary motive, to protect against sudden, unforeseen expenditure, e.g., medical emergency or impulsive purchase during a holiday trip. 3. Speculative motive, investors hold cash to make the best use of any investment opportunity that arises later, e.g., waiting for gold, land prices to fall, then I will use my cash to buy it. Also known as asset demand of money. The amount of money held in cash form vary inversely with the deposit interest rates. If higher interest available in bank deposit sec, people would invest money in banks instead of keeping money in liquid form cash. 11.12 Supply of money, time liabilities of a bank, FDRD, demand liabilities of a bank, CASA. Fixed deposits, cumulative or recurring deposits, staff security deposit, etc. Current account, savings account. Batch, PCB7, Mrunal's economy pillar #1A2, money supply, and RBI's monetary policy, page 55. Time liabilities of a bank, FDRD, demand liabilities of a bank, CASA. Bank legally not required to pay customer before maturity, but may pay after deducting penalty, interest. Demand draft. Overdue balance in fixed deposits. Unclaimed deposits. What does it mean? ANS, explained in video lecture. Public parks more money here because better returns, higher interest rates. Less liquid. More liquid because easily convertible into cash on demand. Black question mark ornament _____ is not included in the assets of a commercial bank in India. Prelims 2019. A. Advances. B. Deposits. C. Investments. D. Money at call and short notice. 1.12.1 Umbrella with rain liquidity of assets. Liquidity equals ease of converting an asset into cash. Cash is the most liquid asset. Umbrella with rain highly liquid assets equals gold, demand deposits, GSEC, T-bill, shares of bonds of reputed companies. Dot. Umbrella relatively illiquid assets equals home, real estate, paintings, sculptures, etc. Because difficult to find buyers at right price instantly. Liquidity injection, infusion refers to phenomenon when RBI buys bank, NBFCs, GSEC, T-bill financial assets to give them cash. How? ANS, watch video. 1.12.2 Umbrella with rain liquidity trap. To be covered separately in Pillar 4Z, microeconomics handout. 1.12.3 Measures of money supply. Objective, to make a good nutrition scheme for India, the government will have to first find the weight of the citizens. Similarly, to make a good monetary policy, RBI will have to find the quantity of money in the system. Definition, money supply means the total amount of money in an economy at any given time. Significance, money supply plays a crucial role in 1. Price level, equals inflation, and 2. Interest rates on deposits and loans. Types, RBI measures the money supply through indicators, M0, M1, M2, M3, M4. Table 1, *CU, coins and currency with public. Measure, *CU. Commercial banks, post office savings bank, liquidity quantity, demand deposits, CASA. Time deposits, FDRD. Demand deposits, SA, time deposits. Narrow money M1, M2, broad money M3, M4. Apply logic to derive formula, e.g. M3 equals M1 plus time deposits with banks. M3 is the most commonly used measure of money supply, also known as aggregate monetary resources, aggregate money supply, because out of all the money supply indicators, M0, M4, this is the indicator RBI will focus the most for its analysis while designing of monetary policy. In above formulas for money supply, we are only counting the net demand, net time deposits, i.e. only public's deposits in bank. We are not counting interbank deposits, i.e. one commercial bank's deposit in other commercial banks. Corona 2020, initial months of lockdown, May 2020, deposit blackdown pointing double triangle because people withdrew money in panic, a precautionary motive. Although in the later months unlockdown and normalcy blackout pointing double triangle bank deposit by December 2020. FAQ 1, why M3 is aggregate money supply. White heavy checkmark ANS, watch video. FAQ 2, why is the liquidity of M4 less than M3? White heavy checkmark ANS, watch video. FAQ 3, what is narrow money and broad money? M1 and M2 are called narrow money because of their smaller size, since they only cover demand deposits. M3 and M4 are called broad money because of their relatively larger size than M1 and M2. Since these terms are given in the NSET, so we have to prepare and accept. It is not some great thing worthy of mains exam that we have to spend more time than that one word association. FAQ, what is hard money vs soft money? Definition differs from website to website. Besides, all such random terms mentioned on investopedia.com are not automatically important for exam. My boundary for this money supply indicator topic is NSET textbook, not the entire internet. FAQ 4, as per NSET class 12, M4 equals M3 plus total deposits with post office savings. Organizations, excluding national savings certificates. So why your revision table doesn't talk about national savings certificates? White heavy checkmark ANS. This much pedantry, I find it less imp for exam, so don't want to overcomplicate my revision-friendly table. Batch, PCB. Black question mark ornament MCQ. If you withdraw 1 rupee lakh in cash from your demand deposit account at your bank, the immediate effect on aggregate money supply in the economy will be __. UPSC Prelims 2020. A. To reduce it by 1,000,000. B. To increase it by 1,000,000. C. To increase it by more than 1,000,000. D. To leave it unchanged. FAQ. I 500 JK doubts in above MCQ white heavy checkmark ANS. Watch entire pillars videos. 11.13 Money supply, M3. FAQ. I didn't understand above chart. White heavy checkmark ANS. First finish the entire pillars all video lecture. Indicator situation in 2021 M0 equals, also known as reserve money, a high-powered money formula in separate section. Quantity black up pointing double triangle increased, but percent growth lower than 2020. M3 equals aggregate monetary resources, aggregate money supply. Quantity black up pointing double triangle increased, but percent growth lower than 2020 money multiplier equals M3 divided by M0. 5.6 in 2020 and 5.2 in 2021. So, money multiplier decreased than 2020. Reason, bankers couldn't find enough loan taker, so. Batch, PC. Indicator situation in 2021. More explanation in next section. Parked large quantity of deposits with RBI under reverse repo window. 11.14 high voltage sign money multiplier, RBI's cash reserve ratio, CR, leads to fractional reserve banking and credit creation by the commercial banks, which creates money multiplier effect as following. Table 2. This process is called fractional reserve banking and credit creation. High powered money, M0, equals 100 asset side, deposits, loaning 10% reserve, Bank number 11009010, bank number 2908119, bank number 38172.98.1, bank hashtag. Total money, here M3, total sum equals 1000 asterisk asterisk. Equals 3. 0 equals 1100 is equal to 10. FAQ, how is this possible? I didn't understand. White heavy checkmark ANS, watch the video. Here, 10% reserve, generated 1, sad smiley 1/10, equals 10x times the high-powered money. 10% 10. 4% reserve ratio will generate 1 or 1/25, equals 25x times, in theory. Raised hand, however, in reality the multiplier may be lower, due to poor banking penetration. In a functional economy, money multiplier, millimeter, is always greater than 1 and CR will always be less than 100%. Why? ANS, watch video. Millimeter directly improves with black down pointing double triangle reduction in CR. Millimeter indirectly improves as economy develops, consumption, loan demand increases, banking penetration, digital economy, less cash economy, etc. Millimeter improves with the black up pointing double triangle in banking penetration, financial inclusion. Boom period, whenever loan demand black up pointing double triangle. When RBI adopts cheap, easier dovish expansionary monetary policy to combat deflation. In 1960s equals less than 2x, 90s equals more than 3x, at present equals more than 5x. FAQ, what will be the impact of SLR changes on money multiplier? ANS, can T be written mathematically? Reason given in video. Batch, PCB 11.14.1 money multiplier from 2019 to 2021, why fallen? Money multiplier fallen from 5.6 on the 31st of March, 20 to 5.2 on the 31st of March, 21 because if banks kept loaning to households and business firms then, M3 or M0 equals money multiplier would grow through zigzag lending deposit activity from one bank account to another bank account. But this deposit to lending activity seems to have slowed down in Corona and afterwards, and banks parking more quantity of money in reverse repo in RBI. That's why multiplier is falling. Raised hand note, there may be 500 other factors, as well affecting these indicators, but gives poor cost-benefit learning all those things from MCQ point of view. 500 hashtag hourglass with flowing sand 11.14.2 high voltage sign money multiplier from 1981 to 2020. Figure 1, Source Economic Survey 2020, zigzag pattern means not increasing steadily. S20 observed that between mid-1990s to 2016 to 17, money multiplier, measured as a ratio of M3 or M0, was mostly black up pointing double triangle. But 2017 to 18 onwards, money multiplier is black down pointing double triangle. Could be attributed to the lack of growth in loaning activities and slowdown in economy. Black question mark ornament MCQ. Money multiplier in an economy increases with underscore. UPSC Prelims 2019. Batch, PCB7, Mrunal's economy pillar hashtag. A. Increase in the cash reserve ratio. B. Increase in the banking habit of the population. C. Increase in the statutory liquidity ratio. D. Increase in the population of the country. Same above MCQ, also repeated in Prelims 2021. 11.15 M0, creation of money, M0, a reserve money, government money, a high-powered money, is issued under RBI Act, by RBI's issue department, with condition that issue department's assets must match its liabilities. Assets of issue department, liabilities of issue department, M0, 1. Rupee coins, RBI buys coins, and 1 Indian rupee notes from Gov and circulates it as the agent of Gov 2. Gold coins, minute 200 Indian rupees crores, 3. Gold bullion, minute 115 Indian rupees crores, 4. Foreign securities, including IMF, earlier minute 400 Indian rupees crores, but post-1995 no such requirement. 5. Indian, Gov, securities, through which Gov borrows money from RBI and returns principal plus interest at later date. Total bank notes in circulation, which consists of 1. Held by public. 2. Held by other banks in vault cash, i.e. amount kept by banks for day-to-day operations. 3. Other deposits in RBI, of public asterisk, banks and governments. Total equals suppose 100 CR, at X date total equals 100 CR at X date. Asterisk such as PM Garib Kalyan Yojana, 2016, under which black money holder was required to deposit 25% of his black money in RBI for a lock-in period of 4 years. More in pillar hashtag 2B. M0 black up pointing double triangle increases when RBI's asset side increases, black up pointing double triangle e.g., Gov borrowing more from RBI using GSEC. FAQ, whose responsibility is it to exchange the public's torn or soiled 1 Indian rupee note? ANS, RBI will do it as the agent of the Gov. FAQ, whose responsibility is it to exchange broken coins? ANS, first of all it is difficult to break a coin unless with a metal cutter. And secondly, I'd not lose sleep over such James Bond Babushona QS, for UPSC exam point of view. Common sense suggests that if RBI is exchanging torn 1 Indian rupee note, then RBI would be exchanges coins as well. FAQ, all coins and 1 Indian rupee paper note is whose liability? RBI or Gov. All coins and 1 Indian rupee paper note are issued by government. Ref. Pillar 1A1 handout, RBI circulate them as agent of the government. However, these items are liability of government. As per RBI website. So, all coins and 1 Indian rupee paper note are liability of Gov. Batch, PCB. However, some books interpret that since 1, RBI is circulating them 2, RBI is responsible for getting torn 1 Indian rupee notes exchanged, so it is RBI's liability. If in doubt for MCQ, then tick Gov as answer. FAQ, can Gov borrow as much as they want via GSEC, white heavy checkmark ANS? No. There are legal limits on Gov borrowing under the Fiscal Responsibility and Budget Management Act, FRBM. More in pillar #2D, FRBM. FAQ, RBI's money supply is limited by above asset liability balance method. But what if Gov issues large number of coins and 1 rupee notes before election to keep voters happy? Will it not create problems in the M0 and economy, white heavy checkmark ANS, too much money supply without enough goods supply inflation? So, a sensible Gov will not do such drama. Beyond that, I've no interest in engaging in further PhD intellectual debates. Not important for exam. Move to next topic. M0. FAQ, how did RBI print money in British Times? ANS, white heavy checkmark watch the lecture videos FAQ, where is the repo, where is the RBI's profit in above table? ANS, white heavy checkmark watch the videos FAQ, if RBI's gold, GSEC gets stolen or burned, lost then will M0 decrease. White heavy checkmark watch the videos FAQ, I500 Jat KE other doubts. ANS, white heavy checkmark, then you keep looking for answers on Google until timer grows up and gets married. I am done with this topic from exam point of view. Hashtag 11.15.1 supply of money, M0 and M3, trend as per ES22. Batch, PCB7, Mrunal's economy pillar hashtag 11.15.2 high voltage sign, currency in circulation, CIC. What is CIC's exact formula? ANS, economic survey didn't give, so I didn't bother to Google. CIC is an indicator to measure cash as a payment instrument, i.e. instead of other payment instruments such as check, NEFT, RTGS, card etc., currency in circulation, the CIC, growth, percent decline from 2021 January to 2022 January. Reason, corona-led precautionary demand for cash has reduced as subsided people are keeping less quantity of cash in hand and depositing more quantity in banks. 11.15.3 MISC, topic, velocity of money circulation. It is the average number of times money passes from one hand to another during given time period. E.g. you bought pen worth 10 rupees from shopkeeper. He used the same 10 Indian rupees note to buy tea from another shop, same currency note performed function of 20 rupees. This velocity of money circulation is affected by following factors. Income distribution, money in the hands of poor people, has higher velocity than the rich people. Why? How? ANS, watch video. If more people borrow money for purchase, higher velocity. Hence developed countries equals higher velocity, because people save less and spend more because of consumerist lifestyle and confidence in government's social security, e.g. USA. Boom period in economy equals more raw material purchase, and hiring equals higher velocity. Other 500 Jat KE permutation combination PhD equals poor cost. 12 monetary policy. Definition of monetary policy is a macroeconomic policy designed by central bank of a country to manage money supply and interest rates. It helps shaping variables such as inflation, consumption, savings, investment, and capital formation. Significance, monetary policy plays an important role in price stability, inflation control, economic growth, job creation, and social justice in any economy. Batch, PC. Milton Friedman, this American economist's research on monetary policy made this subject more popular. He also won a Nobel in economics in this regard, 1976. Philip Curve, inflation equals unemployment, and vice versa. More in pillar #4C. So, stable and moderate inflation is good for the economy. So, RBI tries to keep inflation with 2 to 6% Consumer Price Index, CPI, all India, using its bi-monthly monetary policy made by its 6-member Statutory Monetary Policy Committee. Percent. 12.11 on policy, quantitative tools, also known as, aka, general or indirect tools as they affect the entire economy, and not just a particular sector. 12.11.1 Black Scissors Statutory Reserve Requirements, CRR, SLR, fight inflation, deflation. Figure 2, depositors waiting in a queue and demanding, ABHI, KE, ABHI. CR and SLR are collectively known as variable reserve ratios, or statutory reserve ratios. CR, SLR full form, cash reserve ratio, full form, statutory liquidity ratio, banks must keep this much deposits, or balance, with RBI. RBI doesn't pay interest on this deposit, except in extraordinary circumstances, like 1999's banking slowdown. Banks must keep this much deposits in liquid assets such as cash, gold, GSEC, T-bills, state development loan bonds, and other securities notified by RBI. Batch, PCB7. CR SLR Bank earns no profit interest as such. Some profit may be involved. CR, first suggested by British economist J.M. Keynes, and first introduced in U.S. Federal Reserves, equals Central Bank of USA. Mandated under RBI Act, 1934. Mandated under Banking Regulation Act, 1949. RBI can fix any amount of CR, legally there is no minimum or maximum limit. Although in real life, RBI will not keep CR at 100%, otherwise, no bank can give loans, then economy will stop functioning. Corona 2020, it was 3% of net demand and time liabilities of a bank, NDTL. 2021, CRB gradually increased to 4%. 2022, CR increased to 4.5%. Presently it is 18% of NDTL. Legally, SLR can't be made more than 40%. 40%. All banks must keep CRR. However, RBI may prescribe separate percent norms, slabs for regional rural banks, RRBs, and cooperative banks. More in Pillar 1B1, classification. Similar to left cell of this table. Raised hand difference between NDTL, ODTL, total DTL, equals not IMP. CRR/SLR are counted on fortnightly basis. If not maintained, bank will have to pay penalty interest rate to RBI. This penalty rate is linked with bank rate percent. 15. CRR/SLR ensure monetary stability of India through two primary functions. 1. CRR assists in money multiplier effect. 2. CRR/SLR provide buffer of protection during a bank run, i.e. an emergency, when every depositor wants to pull out money from his bank account at once, mainly due to fake news or rumors, sometimes due to war, e.g. in Russia-Ukraine. While in theory CRR/SLR can be used for inflation control, but RBI primarily relies on repo rate equals its policy rate to combat inflation, and not CRR/SLR. 12.11.2 Black scissors CRR/SLR on foreigners for NRIs deposits in Indian banks. FAQ, does CRR and SLR also apply to the deposits made by foreigners for NRIs for FCNR accounts? Has RBI changed any rules regarding this? Batch, P. ANS, wait till we reach Pillar 3A, currency exchange rate. Presently we are in Pillar 1A2. 12.12 Black scissors CRR, SLR, development in recent years 12.12.1 Black scissors, 2016 incremental CRR, during demonetization, the 2016 to 17 public required to deposit the band 500 to 1,000 Indian rupees KE notes in banks. So, banks' deposits increased drastically. During that time, RBI temporarily prescribed incremental CRR. Raised hand, what was this? How did it work? ANS, 6 years old technical topic for not IMP. Very poor cost benefit in preparing hashtag. 12.12.2 Black scissors, 2020 February, CRR exemption for 5 years, depending on loans, 2020 February, RBI instructed the banks, whatever new retail, loans you give for 1. Automobiles, 2. Residential housing or home mortgages. 3. MSMEs, after the 31st of January, 2020 up to the 31st of July, 2020. Some of these deadlines later extended, but note you can subtract that much loaned amount from deposits while computing cash reserve ratio, CR, for the next 5 years, from the date when the loan was given, or other technical norms, which are not important. In other words, if a bank gives more loans to the above 3 sectors, it'll have to keep black down pointing double triangle CR, black up pointing double triangle loanable funds profit to the bank. And more loans, more business activity, economic growth for the country. 12.12.3 Black scissors, 2020 March, CR black down pointing double triangle from 4% to 3% in Atmanirbhar Bharat. Figure 3. To revive Indian economy after Corona, RBI made certain changes in its monetary policy during March-April 2020 period. Parallelly, Gov also took announced relief in tax filling, free food to poor, etc. Collectively, Modi labelled these actions of RBI plus government equals Atmanirbhar Bharat economic revival package. More in pillar hashtag 4C. 2020 March, RBI announced 100 basis points, BPS, equals 1%, cut in CR. So earlier 4%, 1% equals. This will black up pointing double triangle the loanable funds available with the banks. 2020 1%. 2022, CR increased to 4.5% to fight inflation. CR 12.12.4 raised hand, Black scissors CR technical things no tip following technical operational aspects of CR not imp or poor cost benefit in studying for exam. What is flexible automated option for managing CR? Not IMP. Banks are required to calculate CR on a fortnightly, 15 days basis. They have to maintain at least 90% of that amount in CR on daily basis. RBI also black down pointing double triangle minimum daily CR balance maintenance from 90% to 80% up to 2020 June. Not imp. Raised hand above type of information is not really important for the scope of civil service exam. So, don't lose sleep if some inexperienced private mock test quiz master framing MCQs like this. Black question mark ornament cash reserve ratio refers to underscore. UPSC CDS, I 2020, A, the share of net demand and time liabilities, NDTL, that banks have to hold as liquid assets, B, the share of NDTL that banks have to hold as balances with the RBI, C, the share of net demand and time liabilities that banks have to hold as part of their cash reserves, D, the ratio of cash holding to reserves of banks. Black question mark ornament find correct statements about SLR, UPSC CDS 2011-2, 1. To meet SLR, commercial banks must keep cash only. 2. SLR is maintained by the banks with themselves. 3. SLR restricts the bank's leverage in pumping more money into the economy. Answer code sad smiley A, 1, 2 and 3, B, 1 and 3, C, 2 and 3, D, only 2. Black question mark ornament, when RBI reduces SLR by 50 basis points, which is likely to happen. UPSC pre-2015, A, India's GDP growth rate increases drastically. B, foreign institutional investors may bring more capital into our country. C, scheduled commercial banks may cut their lending rates. D, it may drastically reduce the liquidity to the banking system. 12.13 Monpolisa Quant Tools rates LAF Repo, 2000, RBI's Liquidity Adjustment Facility, LAF, has 2 windows. Batch, P. LAF repo rate, LAF reverse repo rate, the interest rate at which RBI lends short-term loans to its clients, keeping the GSEC as collaterals. It's the interest rate that clients earn when parking their surplus funds with the RBI for short periods to earn interest. Clients enter into an agreement with RBI to repurchase their GSEC at a future date at a or higher, predetermined price. Banks can't pledge their SLR quota GSECs for this borrowing, raised hand. Mechanism similar to repo, RBI gives its GSEC as a collateral to client. Repo also called ready forward transaction. Repo rate is our policy rate to control inflation. Reverse repo rate equals repo percent minus X percent. Repo equals RBI lends short-term loans its clients and demands GSEC T-bill as collateral. Raised hand at every place. I've not mentioned T-bill, as it just reduces the speed of revision. Market repo equals players other than RBI, such as bank, NBFCs, loaning short money to other banks for NBFCs or corporate companies, and demanding financial securities. GSEC T-bill shares of bonds or commercial paper, etc. as collateral. What do those terms mean? ANS, ref the table given in topic operation twist. Batch, PCB7, Mrunal's economy pillar hashtag 1A2, money supply. This will black up pointing double triangle loanable funds with banks' economic growth can be revived. MSF and short-term, repo lending will also be continued separately as per their own existing norms. LTRO doesn't aim to eliminate or replace them. Raised hand further operational guidelines, how it impacts the bond yields etc. equals poor cost, benefit. One 2.14.2 repo TLTRO, SLTRO, on tap windows. Figure 4. Hashtag in above chart, all banks doesn't include payment banks. PB can't give loans, ref, pillar hashtag 1B1. Tools changes in Corona, 2020 up to 2022 February repo, RBI's short-term loan interest rate to clients, while using non-SLR quota GSEC as collateral. Repo interest black down pointing double triangle from 5.15 to 4.00% equals 1.15% equals 115 basis points. Cut equals cheaper loans to revive economy LTRO learned in previous section TLTRO targeted long-term repo operations. TLTRO up to 3 years loans at repo percent to banks with condition that they must invest X% of it in NBFC companies bonds etc. Special LTRO window, SLTRO, RBI loan for 3 years at repo percent to ONLY small finance banks, SFB, loans to A, micro and small industries, B, unorganized sector entities. Batch, PCB7, Mrunal's economy pillar hashtag. Tools changes in Corona, 2020 up to 2022 February on tap liquidity windows for healthcare. RBI loan for 3 years at repo percent to banker loans to hospitals, vaccine manufacturer, vaccine importers, medical device makers, oxygen suppliers etc. Beach umbrella on tap liquidity windows for contact intensive sectors. RBI loan for 3 years at repo percent to banker hotels, restaurants, tour operators, bus operator, car repair service, beauty parlors, spa, saloons, event or conference organizers. AFI RBI loaned large amount of money to all India financial institutions, AIFI, IE, NABARD, NHB, SIDBI and Exim Bank, more in pillar hashtag 1B1. 2.14.3 RBI special windows, useless doubts by flag carrying barber owners. 1. FAQ, why would bank borrow in TLTRO on tap windows when many conditions are imposed on it? ANS, maybe the bank feels it will earn profit from such loan of investment. 2. FAQ, why would bank borrow in repo rate, short term, when LTRO offering long-term loans? ANS, 1. Depends on the requirement of the bank. 2. TLTRO amount is finite, e.g. first round total 1 Indian rupee lakh given. So, if a banker came late to RBI's office and Palji biscuit stock was finished, banker may have to buy Britannia biscuit. 3. FAQ, how does TLTRO involve flight of foreign investors, and its impact on exchange rate and bond yield, etc.? ANS, such long-winded financial cause effect equals no importance in UPSC, even though private mock test wallet design useless MCQs from it. 4. FAQ, I want to do PhD on this until Timer grows up and gets married. ANS, good luck to you. You keep doing that, but I'm finished teaching this topic here. 2.14.4, 2020, reverse repo rate cut. Figure 5, serve loan, telemarketing spam calls. Corona-led economic slowdown loan demand black down pointing double triangle banks parking their excess funds in RBI to earn interest in the form of reverse repo rate. By 2020 March, banks parked ~3 lakh crores in RBI in reverse repo. So, RBI has drastically reduced black down pointing double triangle the reverse repo rate to 3.35% to discourage such laziness of banks. Batch, PC. Benefit of reverse repo reduction. If SBI offers 5.9% fixed deposit interest rate to depositors and parks it in the RBI reverse repo rate, 3.35%, then SBI will actually make losses. So, RBI hopes SBI will now be forced to give loans in a proactive manner through SMS spam, email spam, and unwanted telemarketing call sec. Although as per 2.1, banks still continued to park their surplus funds in reverse repo because there were not enough loan takers due to Corona slowdown. 2.14.5 Mon policy quant tools variable rate reverse repo, VRR, traditional fixed reverse repo variable rate reverse repo, FRR, interest rate fixed by RBI e.g. 3.35%. Interest rate decided by bidding process of clients, how? Explained in video, but not important. Thus, RBI not fixing the percentage % in advance. It is variable %, depending on bidding action of clients. RBI can reject or refuse to accept reverse repo deposits from clients without giving him any reasons. Same as the left sell. This activity was paused during Corona 2020, but resumed in 2021 January. Reasons for conducting VRR. Because RBI wants to suck excess money supply from the market without modifying the fixed reverse repo %, clients may hope to earn more interest rate in VRR than fixed rate reverse repo. VRR, FAQ. Variable reserve ratio equals is a collective term used for describing CRR and SLR. Variable reserve repo rate equals is a separate thing under reverse repo. 2.14.6 Variable rate repos, VRs, 2022 February. RBI said it'd also conduct variable rate repos, VRs, auctions, similar to variable rate reverse repo. How it works or what impact will it generate? ANS, apply logic similar to traditional fixed repo rate. Beyond that PhD, similarity difference of no use. Hashtag 12.14.7 Enhanced reverse repo rate for hardworking bankers if bankers use a sector-specific on-tap liquidity window, e.g. bankers taking loans from RBI to lend to hotel, beauty parlors, vaccine manufacturer, etc. If this banker achieved IS 20-inch loan giving target IF, he parks his surplus funds under reverse repo window. RBI will pay him 3.75% reverse repo rate instead of 3.35% fixed reverse repo paid to lazy bankers. Benefit? It encourages bankers to work harder to give loans to various sectors. FAQ: how or why is this possible? How can banker borrow money and yet have surplus funds? ANS: banker will not instantly get all borrowers on day one. So often he would invest his surplus money of depositors temporarily in RBI under reverse repo just to earn small amount of profit instead of letting the cash stay idle in his bank office. 12.14.8 Mon Policy Quant Tools Rates MSF 2011. Marginal Standing Facility MSF is the interest rate at which RBI lends short-term loans to scheduled commercial banks SCB and regional rural banks RRB with the SLR quota GSEC as collaterals. MSF higher than repo rate. MSF equals repo percent plus 0.25%. What is the difference or meaning of SCB, RRB, SFB, UCB, etc.? Answer: Ref. HTT pillar #1B1 classification FAQ. Which types of banks can access MSF facility? White heavy checkmark ANS. It is given in above note itself. 12.14.9 Mon Policy Quant Tools Rates Bank rate MSF repo rate introduced in RBI Act 1934 * 2011 2000. What is the percent rate? Since 2012, bank rate percent equals MSF equals repo percent plus X percent. Monetary Policy Committee decides who can borrow from the RBI. Only banks, all clients of RBI, bank, non-bank, union and state gov collateral required. * yes and no bank can pledge securities from its SLR quota yes, GSEC a T-bill. But not from SLR loan duration longer than repo short term usually overnight to 14 days. Batch, PCB 7. Bank rate MSF repo rate. Primary utility. Nowadays mainly for deciding penalty on errant banks. Emergency borrowing by bank, using the securities from SLR quota subject to certain limits. Short-term borrowing by all clients of RBI. RBI Act 1934, bank rate is the standard rate at which RBI buys or rediscounts first-class securities, bills of exchange, or other commercial papers. NSET, rediscounting basically means the repo wallet game equals RBI buys at X price, resells at Y price where Y X, but since the introduction of the repo rate in the 2000s, the bank rate has become a dormant tool, equals not frequently used by RBI for lending or by banks for borrowing. So, reference books or websites differ in its present operational status, e.g. some of them would say, O bank rate requires no collateral and is meant for long-term loans. O bank rate accepts collateral, which can be both GSEC, T-bill, as well as private company securities. Raised hand. So, in the real exam, it depends on which book or web source the examiner has copied the statements, and accordingly you've to take a judgment call in ticking the answer. Tick. The 14th of December, 10 Quanti. Tools SDF equals reverse repo wallet game without collaterals. 2013. Urged Patel Committee on Monetary Policy proposed standing deposit facility. SDF. SDF equals clients park or deposit their extra money in RBI. RBI pays them interest. RBI doesn't give any collateral, unlike in reverse repo. Equals. Benefit of SDF. To combat inflation, RBI can suck extra money supply via SDF window. RBI will not have to pledge GSEC as collateral to clients. 2018, RBI Act amended to add SDF facility. 2022 April, RBI started or launched SDF. RBI also made changes in policy corridor. Ref. Next section. FAQ. Reverse repo rate not discontinued. Reverse repo will remain as part of RBI's toolkit. RBI will continue to use it at its discretion from time to time. Presently reverse repo is 3.35%. FAQ. What is the deposit time duration of SDF and reverse repo? Batch, PCB 7. Sufficient to know these are for short term. Now what exactly is short term? Is it 1 day, 7 day, 14 day? Equals not important for exam. Why overburden the memory card of the brain with unnecessary information? FAQ. If SDF and reverse repo both present, then why would bankers go for SDF where no collateral given? The time period and interest rate offered on SDF and reverse repo are different. So, it depends on bankers' business requirement, cash flow management. RBI is not pointing in gun their head to use it. The 14th of December, 11 chains MSF repo vs reverse repo versus SDF tool MSF repo reverse repo SDF present rate 2022 July 5.15% 4.9% 3.35% fixed reverse repo rate FR 4.65%. Lender RBI banks plus some NBFCs borrow ONLY scheduled commercial banks SCB. Banks plus some NBFCs RBI. Borrower need to give collateral. Yes not required. Hashtag facility available at discretion of client, SCB, RBI client, banks plus some NBFC. Hashtag discretion equals here means suppose a client, banker NBFC, comes for reverse repo equals it's not compulsory for RBI to entertain him. But if client, banker, comes for MSF equals RBI will not say no to him. RBI will help him. What is SCB? ANS, refer pillar 1B1, classification of banks. Batch, PCB 7. The 14th of December, 12 Policy Corridor, LAF Corridor. Policy Corridor, also known as Liquidity Adjustment Facility, LAF Corridor. Before 2022 April, policy corridor equals total width between MSF, repo, reverse repo. After 2022 April, policy corridor equals MSF, repo plus 0.25%, repo, SDF, repo 0.25%, thus total width is 0.25 plus 0.25 equals 0.5% upper end of corridor, a ceiling, center lower end of corridor, floor, total width. Tool. MSF repo before, reverse repo. R after, SDF before corona MSF equals a plus 25 BPS, a percent R equals repo, 25 BPS, 25 plus 25 equals 50 BPS. In Corona 2020 to 21 MSF equals a plus 25 BPS, a percent R equals repo, 65 BPS, 25 plus 65 equals 90 BPS. 2022 April MSF equals repo plus 25 BPS, a percent SDF equals repo, 25 BPS, 25 plus 25 equals 50 BPS. Note, 100 base point system, BPS, equals 1%, so 25 BPS equals 0.25%. 50 BPS equals 0.5%. SDF has replaced the reverse repo rate as the floor of the policy corridor. However, reverse repo was not discontinued. Reverse repo will remain as part of RBI's toolkit. Reverse repo will be used as per the mood discretions of the RBI from time to time. Batch, PCB 7. The 14th of December, 13 scales true party repo, outdated topic. I find it not important for exam anymore. So deleted from handout. Sufficient to know this is not a tool of monetary policy. It is a method meant to help companies to borrow money from the market. The 14th of December, 14 BPLR, MCLR, external benchmarks, etc., terms related to how individual banks decide their loan rates. Ref, end section of handout. The 14th of December, 15 market operations, OMO, inflation sell GSEC, deflation buy. Figure 6, ALU Lelo, Piaz Lelo, GSEC Lelo. I, open market operations, RBI buys and sells union and state gov securities to control money supply. O, RBI buying equals money supply black up pointing double triangle increased, a liquidity injected in the market. O, RBI selling equals money supply black down pointing double triangle decreased, a liquidity absorbed from the market. 2. Market stabilization scheme, RBI sells special type of GSEC, T-bill and cash management bills, CMB, to suck excess liquidity. Raised hand how it works. How is it similar or different than OMO? ANS, no TIMP. Very low profile thing for scope of UPSC. 3. Sterilization of Forex swap. Their primary objective is to control the currency exchange rate volatility, e.g. $1 equals 65, 70, 80. More in pillar hashtag 3, 4. Operation Twist, 2019 a special type of OMO. Explained in next segment. 12.15 Mon policy, Quanta tools, OMO Operation Twist. Before that, you have to be aware of some many basic concepts. 12.15.1 Security debt GSEC and bonds. A security means a certificate, a document indicating that its holder is eligible to receive a certain amount of money at a particular time. This could be a Table 3, borrower gov corporate, short term, less than 1 year. Treasury bills, cash management bills, bill of exchange, commercial papers, promissory notes. Long term, 1 year of GSEC, sovereign bonds, bonds or debentures. Batch, PCB 7, Mrunal's economy pillar hashtag 1. Borrower gov corporate. Interest rate usually lower than corporates because risk is low depends on following factors. 12.15.2 Deepening of GSEC market retail investors, RDAG, at RBI. RBI launched Retail Direct Scheme in 2021. Under this scheme, RBI permits Retail Direct Guild, RDG, account for retail investors on its eCuba online platform. Both resident Indians and non-resident Indians, NRIs, can open this account. Then retail investors can directly buy treasury bills, T-bill, GSECs of union government, state development loans, SDLR GSECs of state govs, and sovereign gold bonds from RBI directly. Application fees to open the account equals 0. Benefit. 1. Earlier retail investors bought GSEC indirectly through mutual funds wherein mutual fund manager, MF, charged commission of fees. Now retail investor can buy directly so does not have to pay such commission of fees to MF managers. More in pillar hashtag 1C SEBI share market, demat account etc. 12.15.3 Corporate bonds. Factors that determine its interest rate. If companies want to borrow money, they may issue bonds to investors. E.g., whoever buys this Reliance bond worth 1,000 Indian rupees, we will pay him 9.4% interest rate per year and return the principal after 15 years. Usually the interest rate offered on such bonds depends on factor, how it determines corporate bond interest rate. Risk, credit rating of company lower credit rating, e.g. CCC, or D, higher interest rate needs to be offered because risk of default is high. Inflation Y how, ANS, Ref, Pillar 1C inflation index bonds bank deposit interest rates higher than the bank, deposit interest rate, higher bond interest rate needs to be offered to attract households to shift money from bank savings, FD to corporate bonds. Yield on GSEC. If GSEC yield black up pointing double triangle, then corporate will have to offer even higher bond. Interest rate to attract the investors from GSEC investment towards C bond investment. 12.15.4 Bond yield. Bond yield is the profit an investor earns on a bond investment. Suppose, government issues a GSEC or bond, 8% annual interest, tenure, 1 year B-day master invests 100 Indian rupees. So, upon 1 year maturity, he'll get 8 Indian rupees interest plus 100 Indian rupees principal equals 108. So his profit or yield will be equals 8%. Batch, PCB 7. But suppose, before maturity of 1 year, B-day master urgently needs cash. So he sells 100 Indian rupees face value bond to Mr. Jefflal at a discounted price of 90 Indian rupees. Jefflal keeps it till maturity. Government pays him 108 Indian rupees. So, for Jefflal the profit OR current bond yield to maturity is yield equals 108 90 90 100 equals 20%. 12.15.5, bond yield proportionality 1 price equals. Bide bought at 100, his yield is 8%, Jethwell bought at 90, his yield is 20%. Thus, bond yield is inversely related to the current selling price of the bond in the secondary market. If a bond's demand black up pointing double triangle, its selling price will black up pointing double triangle bond yield black down pointing double triangle because of inverse relation 12.15.6 bond yield. Other factors affecting it: if the economy is booming, companies are making great profit, investors may sell bonds at low prices in a hurry to unlock their money to invest it in shares of companies because they think it'll get them more dividend. Then bonds current selling price in the secondary market black down pointing double triangle yield black up pointing double triangle. If the economy is facing recession, continuous decline in growth rate, companies will not make great profit, investors sell shares and prefer to buy bonds hoping they'll get secured fixed interest. Then bonds demand black up pointing double triangle in the secondary market selling price black up pointing double triangle yield black down pointing double triangle. 12.15.7 Operation Twist. Why? Commercial banks were reluctant to lend money to private sector companies because of the problem of bad loans and non-performing assets, NPA, more in Pillar 1B2. If such companies could borrow money by issuing corporate bonds at cheaper interest rate, more factories, more jobs, more production, more GDP. RBI decided to attack the third factor. If the yield on long-term GSEC decreased, then automatically corporate bond interest rates could also decrease. Batch, PC. Figure 7. Figures are only for illustration. Raised hand, no need to memorize numbers. 12.15.8 RBI's Operation Twist. Methodology, 2019 December. Since RBI's existing monetary policy tools had failed to make loans cheaper for corporates and boost the economy. So in 2019 December, RBI started a special OMO wherein RBI sold shorter-term GSEC of 1 year and higher tenor worth 10,000 Indian rupees crore. RBI bought longer-term GSEC of 10 to 14 years tenor worth 10,000 Indian rupees crore, i.e. equal amount as above, so as to keep money supply unchanged. Since RBI started buying long-term GSEC, the demand will black up pointing double triangle price will black up pointing double triangle yield is black down pointing double triangle. The 10-year GSEC yield lowered from 6.75% to 6.60%, and we've already learned corporate bonds are priced benchmarked, keeping GSEC yields in mind. So, twist lower GSEC yield means cheaper borrowing for private sector companies. Because they can borrow money by issuing their long-term corporate bonds at much cheaper interest rate than before. When a private company meets a bank manager to borrow money, it can negotiate the loan price. If your bank does not lend me money at this cheaper interest percent, then I will issue my own corporate bonds. Even the bank lending rates for corporate loans could be reduced. Cheaper borrowing for government. For reasons similar to above. How? Explained in video. Investor of long-term GSEC will feel discouraged to hold the GSEC till maturity, 10 to 14 years. He will try to sell it to another party, RBI, and pull out his money. Then he may park at a corporate bond, bungalow, a car, a go vacation, etc. Thus, it helps boost the consumption economy grows. If not understood, then memorize by rote learning. 1. 1961, Operation Twist was first used by the US Federal Reserve. 2. 2019, RBI used also done it. Officially called Special Open Market Operation, OMO, wherein the central bank simultaneously buys and sells GSEC of varying maturities to adjust their yields. Batch, PCB 7. Which helps reduce interest rates on corporate bonds for debentures easier to mobilize investment factory expansion jobs, GDP growth. 3. Objectives of OpTwist equals A. To make borrowing cheaper for companies and gov. How? A and S, explained in video. B. It was not meant for fighting inflation. 4. It ensures better monetary policy transmission for economic growth. Because earlier, simply reducing the repo rate has not helped much in making loans cheaper for corporates. 5. Net liquidity remains unchanged because 10,000 Indian rupees crore goes in and the same amount comes out of the market. Raised hand beyond this. 12.15.9 Raised hand, bond yield and inverted yield curve, poor benefit for exam 1. Inverted yield curve equals raised hand 2. Negative bond yield equals raised hand 3. Chinese bond yield KI news, Italian bond market crisis equals raised hand not IMP. Black question mark ornament India government bond yields are influenced by which of the following? Prelims 2021, 1. Actions of the United States Federal Reserve, 2. Actions of the Reserve Bank of India. 3. Inflation and short-term interest rates, answer code, A, 1 and 2 only B, 2 only C, 3 only D, 1, 2 and 3. Black question mark ornament MCQ. Open market operations refers to Prelims 2013, A. Borrowing by banks from the RBI, B. Lending by commercial banks to industry and trade, C. Purchase and sale of government securities by the RBI, D. None of the above. Black question mark ornament MCQ. Which would result in an increase in money supply and economy? Prelims 2012, 1. Purchase of GSEC from the public by the central bank. 2. Deposit of currency in commercial banks by the public. Batch, PCB 7. 3. Borrowing by the government from the central bank. 4. Sale of government securities to the public by the central bank. Answer codes, A. 1 only, B. 2 and 4 only, C. 1 and 3, D. 2, 3 and 4. Black question mark ornament MCQ. Which of them is a part of monetary policy? Prelims 2015, 1. Bank rate 2. Open market operations 3. Public debt 4. Public revenue answer codes, A. 1 only, B. 2, 3 and 4, C. 1 and 2, D. 1, 3 and 4. 12.16, Mon policy, Quanta tools, OMO GSAP full form, secondary market, GSEC acquisition program mechanism, RBI to buy GSEC from secondary market on specified timetable. GSAP, during these months total GSAP 1.0, first quarter of 2021 to 22 equals April to June 2021, 1 Indian rupee lakh CR GSAP 2.0, second quarter of 2021 to 22 equals July to September 2021, 1.2 Indian rupees lakh CR. 12.16.1, OMO GSAP, benefit. Black up pointing double triangle money supply in the economy. Investors who sold GSEC to RBI equals those investors got they may first do shopping and or 2 invest in other companies shares bonds 1 plus 2 equals economic growth. FAQ a moral outrage. Why GSAP? Why not achieve this via black down pointing double triangle reducing repo? ANS. Every person may not be interested in taking new bank loans. Some investors may be interested in selling their previous investments in GSEC to unlock the money. GSEC, if RBI black down pointing double triangle decreases the repo rate too much, it can result in A, inflation, and B, black down pointing double triangle decrease in the deposit interest rates offered by the bankers on savings account middle class and pensioners affected negatively. Batch, PCB7, Mrunal's Table 4, to sum up, OMO, GSAP, OP twist. GSAP RBI is buying GSEC to increase money supply post-corona revival. Money amount, date and time calendar a timetable is transparently and systematically announced in advance before starting. OMO RBI is selling GSEC to control inflation. RBI is buying GSEC to fight deflation. Its timetable not announced in advance, in detailed manner, unlike GSAP. OMO window is not discontinued. It'll continue to function as per discretion of RBI. Op twist RBI is buying and selling of GSEC of varying maturities. To reduce GSEC yield so future borrowing becomes cheaper for government and companies. 12.17 Monetary policy, qualitative tools, quantitative tools, SLR, CRR, repo etc., control volume of loans. Whereas, qualitative tools, PSL, LTV etc., control distribution of loans to a particular sector of economy. E.g. how much loan to a particular sector, e.g. agriculture, renewable energy. Batch, PCB. How much loan to a particular segment of society, e.g. farmers, women, SC, ST. So, qualitative tools also known as selective or direct tools. 12.17.1 Moral suasion and publicity. Figure 8, repo loan. RBI governor moral suasion meaning applying persuasion without applying punitive measures. RBI governor tries this tactic via conferences, informal meetings, letters, seminars etc. E.g. RBI governor asking banks to transmit repo rate cuts, open new branches in rural areas, spread financial literacy, give loans to farmers beyond PSL quota etc. E.g. RBI governor requesting CM or finance minister to control fiscal deficit and subsidy leakage to enhance the efficacy of RBI's monetary policy. Publicity, RBI governor could give media statement, speech during university convocation, memorial lectures. Look, I reduced repo rate, but banks are not passing the benefit to customers, and XYZ. By doing so, he can create an effective public opinion which also pressurizes the banks to stop their thuggery. 12.17.2 Direct action. RBI can punish banks, and even non-banks, for not complying with its directives under RBI Act, Banking Regulation Act, Payment and Settlement Systems Act, Prevention of Money Laundering Act PMLA, Foreign Exchange Management Act FEMA. 2019, RBI ordered the banks to have a clawback provision in their CEO and top executive salaries. E.g. if the CEO did any scam or fraud, he'll have to return his previously paid salary or bonus, even if he had retired, left the job afterwards. 12.17.3 Margin requirements are loan to value, LTV. Figure 9. RBI can mandate loan to value, LTV, for a gold loan, home loan, auto loan or business loan etc., so a bank or NBFC can't lend more than X% of the value of the collaterals. RBI can change this X% to boost or curb demand. Batch, PCB. LTV reforms in 2020 August before after gold loan, 75% value of gold or gold jewelry 90%. Benefit? More quantity of loan by pledging same quantity of gold post-coronavirus revival. 12.17.4 Selective credit control, in a negative, a restrictive direction, in a positive direction. Credit rationing system, English, in 18th century, and USSR, till 1990s, the central bank will not give more than X amount as loan to individual banks. And an individual can't get more than prescribed amount of loans for each category, housing, education, business. 1960s, Credit Authorization Scheme, CAS, in India, all commercial banks had to obtain prior approval of the RBI before loaning 1 Indian rupee crore to a single borrower. 1970s, RBI imposed quantitative ceiling on non-food loans to boost green revolution, food inflation. But such measures failed due to lax monitoring and loopholes. Consumer credit control, e.g. During deflation or recession, RBI can relax the down payment, EMI installment norms for durables like vehicles, TV, fridge etc. to boost consumption and demand. Priority sector lending, see below. 12.18 Figure 10, Governor Sahib. 1968, first time RBI used the word priority sector. Banks must give 40% of their loans to 3 priority sectors: 1, agriculture; 2, small industries; 3, exporters by 1985. Over the years, more sectors were included in it. 2015, some reforms in PSL. 2019, RBI's UK Sinha Committee on MSME Loan Reforms suggested some more reforms in the PSL. 2020 September, RBI reformed PSL guidelines as following: priority sector loans norms minimum quota after 2020 September reforms before after weaker sections, per 12% SC, ST, women, PH, minorities, manual scavengers, artisans, 10% black up pointing double triangle 12% asterisk. Priority sector loans norms minimum quota after 2020 September reforms before after PM Jan Danya Jana overdrafts up to 10,000 rupees beneficiaries of Gov's National Rural Urban Livelihood Mission schemes, NILM, NULM, more in pill #6. HRD poverty removal schemes, agriculture, all farmers, small and big, 10% 8% agriculture, marginal farmer, owns up to 1 hectare land, small farmer, 1 up to 2 HT. 8% black up pointing double triangle 10% asterisk. Micro enterprises, Cardi Village industry 7.5% above categories, weaker section, agriculture, micro enterprise, plus, other categories such as small and medium enterprises, affordable housing loans to beneficiaries under Pradhan Mantri Awas Yojana, food processing companies, vermicompost, biofertilizer, seed production, exporters, student education loans, up to Rs.10 lakh, social infrastructure, schools, drinking water, sanitation facilities. Healthcare, COVID-related hospitals or labs, etc. Renewable energy projects, wind mills, biomass generators, solar street light, microhydel plants, etc., etc. 4.5%, 2.5%. Total PSL for Indian scheduled commercial banks and foreign banks with 20 or more branches. 40%, 40%. Asterisk above quota reforms to be implemented in phase-wise manner by 2023 to 24. Benefit? It will black up pointing double triangle loan availability for the weaker section and small farmers, thus helping in the United Nations Sustainable Development Goals related to poverty removal. Ref. HDT pillar #6. PSL quotas are minimum and not maximum. So, if bank wishes, it can even give 60% of its loans to weaker sections, instead of just 12% minimum quota meant for weaker section. Banks' loans given to non-banking financial company, NBFC, who are lending to above PSL categories equals such indirect loan to PSL sectors will also be counted for bank's quota. Bank plus NBFC's joint lending, a co-lending, a co-origination loans, what does it mean? #PhD not IMP. Note, PSL norms don't apply to NBFCs, PSL norms apply ONLY to bankers. Batch 12.18.1 PSL reforms 2020 on RRB, SFB, or UCB. What is the difference or meaning of SCB, RRB, SFB, or UCB, etc.? Answer, Ref. HDT pillar #1B1, classification, type of bank and PSL reforms 2020, before after Indian scheduled commercial banks, SCB, and foreign banks in India with 20 or more branches 40% same 40%. Foreign bank in India with less than 20 branches, 40% same 40% regional rural banks, RRB, 75% same 75% small finance banks, SFB, 75% same 75% urban cooperative banks, or UCB. Asterisk 40% black up pointing double triangle 75% rural cooperative banks. Not applicable, not applicable. These quotas implemented in a gradual or phase-wise manner. Will become effective in 2023 to 24. Internal quotas may be different for these banks, e.g. RRBs, weaker section equals 15%. But poor cost benefit in chasing all that information. #hourglass with flowing sand.